Hello from sunny Portugal. I'm here for a couple of weeks and then afterwards I'm on to Dubai and India. And then last but not least, back in beautiful Singapore. Yes, it may be a summer break for many of us, but we're still committed to doing those daily videos that will help everyone understand the sometimes complex world of cross-border transactions as we and our team of tax advisors seek to demystify that sometimes confusing world. My name is Darren Joseph. Please visit HG.tax. We have over 1,000 videos, over 2,000 articles on completely free of charge on cross-border tax issues. So today I want to talk about, just draw your attention to an IRS news release. For those who can see the screen, it is IR 2023-148. So this was released around the 16th of August this year, 2023. So, it's essentially on the surface, it seems to be pretty mundane, routine. The IRS is kind of just basically patting itself on the back for all the gains they've made since they got that extra 80 billion to spend under the Inflation Reduction Act last year in 2022. So they talk about, five things. They improve service during the 2023 filing season, its paperless processing initiative, the implementation of scanning technology to process more returns. They spoke about the expanded customer callback option for phone inquiries, new voice and chatbots, and a direct deposit refund option for taxpayers filing amended returns. So that's, pretty routine stuff. But here is the part that really applies and is relevant to our team and to the clients that we serve. So the IRS is kind of calling out or drawing attention to its pursuit of tax evading millionaires. Now that the IRA, the Inflation Reduction Act, has given it all this budget. What is it doing specifically? Talks about three things. Puerto Rico, which is not something that affects our clients. We generally would not have been encouraging that because, of the obvious. We did a series of videos, as well as there's some articles on our website for those who want to jump into the Puerto Rico option. In the video, we spoke to a Puerto Rican accountant who runs his practice there, and he gave us great insight into what is actually happening on the ground. So you can look at that. The other thing is they're cracking down on millionaire non-filers, and this we know that to be the case. And more importantly and relevant to our talk today, the pension arrangements. There was a scheme, not a scheme. I don't want to make it sound like a scheme, but it was a scheme. There was a product offering that's perhaps the right word. It's a product offering based on a Maltese structure. So this was actually listed in another press release from the IRS. The IRS also does a list of the dirty dozen. They call it the dirty dozen. So this is the top 12 or the top tax scams. I mean, they're meant to be structures, they're meant to be planning opportunities, but the IRS looked at them and said, no, these are just straight up scams. And the Malta structure was included in it. So to those who are unfamiliar with it, I think we have a detailed article on our website as well as on my LinkedIn page, which got quite a number of views. And this is like years ago. I wrote that. So essentially it was supposed to exploit, some perceived loophole in the U.S. Malta tax treaty. So what you do is you create a pension structure, and eventually you would enjoy tax-free distributions from this structure as a result of this alleged loophole. And it was pushed predominantly, within our ecosystem, U.S. expats, particularly those in certain jurisdictions where, the higher income earning expats would be. So like where I've been based in Singapore, for example, London, Zurich, Paris. Anyway, the takeaway from this is you just need to be careful when you're working with international financial advisors and promoters. What do I mean by that? The Malta scheme wasn't exactly advertised on television. It wasn't on YouTube. There wasn't TikTok back in those days, but it was promoted through accredited wealth management firms. These are qualified in many instances financial advisors who targeted U.S. expats. So so it's not something that was, in the shit years. It was very, very mainstream. I first encountered it back in 2013, 2014 when I moved out to Singapore for the first time. And I mean, it was clear to me at that point when I looked around how the ecosystem, not just in Singapore, but just in any of the financial centers in Hong Kong, Dubai, wherever, is driven by incentives, which of course makes sense because incentives drives human behavior. I had in my hand and I read an 8-page opinion from a fairly recognized, I'm not going to call the name, accounting firm. Its main office is in London, but they had offices in Hong Kong and elsewhere. They wrote an 8-page opinion in which they basically supported the notion that these distributions should be tax free. They were fans, they were in favor of it. I probably still have a copy of it. I also read an opinion, a 20-page opinion, and again, I still probably have a copy of it somewhere in my cloud, from a well-known private client law firm. Again, I'm not going to call the name of it, but they were more circumspect. They went on, rambled on for like 20 pages, and at the end they said, well, this is how people say it should be working, but we're not too sure. So they basically covered themselves. But the point is that they would have known this is a really well-established international law firm. For those in the expat advisory space, if I call the firm, everybody knows who they are. And they should have known that when they were retained, I assume they were paid for it, when they were retained to write that opinion, that the promoters would use it as a sales tool, and they were. They were emailing it. That's how I got a copy. They were emailing it to our clients, saying, "Hey, look, such and such firm, is basically in favor of it." And the average person, unfortunately, may not have time to read 20 pages of legalese, and they just assume they looked at the cover page. Oh, I know this firm. Everybody knows this firm, and they are in favor of it. So maybe I should be open-minded to the offering. Anyway, it is what it is. But to us, it was clear from the day one that it may not violate the letter of the law, but it definitely violated the spirit of the law. And there was like zero chance of it surviving scrutiny by the IRS. But, incentives are what incentives are. So, people went with it. Promoters got on board and they were pushing it heavily. So just understand, again, the takeaway is when you are looking at making a financial decision, get advice from multiple perspectives and get independent opinions. People who are not on commission, people who are not incentivized to see you sign on the dotted line and pass into your hard-earned cash. Get advice from qualified people who are, perhaps incentivized to give you an honest opinion, and they're agnostic as to whether you actually pursue it or not. So that's probably the best way of saying it. Someone who's qualified and agnostic as to whether you sign on the dotted line or not. They really don't care. They don't win either way. They don't lose either way. So hope that helps. Please have a look at our website. Again, we have like over 2,000 articles and we're updating our videos and podcasts daily. Thank you, and I'll see you next time. My name is Darren Joseph from HTJ.tax.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.